Alright, so you spent a lot of money on your credit cards. They are damn near maxed out, and now you're spending an ungodly amount on interest. But you're better now, right? That was mistakes of your past. But how are we going to get rid of this card with this high interest? In this video, we are going to talk about balance transfers, how they work, do they affect your credit score, and how to get one. Be sure to stick around to the end because I will give you a bunch of recommendations for credit cards that you can get that have a 0% interest rate. It's an introductory rate, so it's not forever, but it's enough to help you get your financial house in order. And I will also list cards that do not have any transfer fees, because the less fees, the better. All that and more, so keep it locked. It's Crystal with the Cash Compass. Alright, so welcome back. I am here to teach you everything that you should have learned in school about money, but for whatever reason, they forgot. They was probably applying for credit cards. Please be sure to subscribe because we talk about everything from personal finance to the economy to investing. And I get right into it. Alright, Crystal, so how does a balance transfer work? You apply for another credit card, which I know, it sounds counterintuitive, but stick with me. You apply for this credit card, it has to be one that makes sense financially, but what you'll do is once you get approved for that new credit card, they will give you the option to bring a balance over from another credit card. So if you're over here with Capital One at 24% interest, you can go to new card, which I'll give you some options like I said at the end, and they will have a 0% interest for a set amount of time. During this time, you can be extremely aggressive at paying down your debt, and that will save you a lot of money in interest. So obviously you still owe the debt, you can't just get rid of it, but it's at least kind of restructuring it so that you can get an opportunity to get a breather and try to get that paid down ASAPidly. The purpose of this is to get away from high interest rates. So you're going to compare your cards to make sure that the card that you choose to do this balance transfer is the best for you. You guys are smart because you're watching my channel, but just for those who may be new or starting out, when you have a credit card and you're making a payment, a portion of it is going to interest and a portion of it is going to principal. And in a lot of cases with these high interest cards, more of it is going towards your interest than your principal. So even though you think you're paying $250 down a month, you're really probably only paying half of that, if that. If you transfer these cards, all $250 will go directly to bringing down that principal balance because it's a 0% interest. So you're really focusing on just getting down your debt. So that's how they work, right? Here's how they don't work. Do not bother with this if you know you're gonna just get a new card and then still max out the old card, right? The point is to get better financially, not to add on more debt. So you wanna make sure that you are in a space where you're disciplined, you're sick and tired of this debt, and you wanna get that paid down. Also, you wanna make sure that you're going from a high interest to a low interest. Like I mentioned before, these rates that they have, the 0% rates, it's introductory. After that, it will jump up to a certain amount. So if you can't get that paid off within the time frame that they give you the 0% interest, you'll have to calculate and see, does it make sense for you to switch over? For example, some credit unions will have credit cards at like, I don't know, maybe 8% or even lower. If you have a balance on your credit card that will take you years and years and years to pay off, it wouldn't make sense to leave an 8% card to go to a 24% interest rate card, because then after that introductory period, your interest is going to go through the roof even higher than it was before. So what you'll have to do is get an understanding of your credit card, your interest, how that works, versus what you're trying to get into. Obviously, the benefit is a lower interest rate if you're doing this properly. Also, you get that much closer to paying off your debt because you're not going to be paying interest and you're only paying what you owe. And it's an opportunity, if you can structure this correctly, to pay all your debt for free. Now, I say for free because it depends. There are some fees associated with these cards. I'm going to give you options that have fees and that don't have fees, and you assess what makes more sense to you. So some credit cards have balance transfer fees on top of whatever the interest rate will be after the introductory period. It's typically 3%. In some cases, it's around 5% too. So let's say if you had a $10,000 balance that you're trying to transfer over, they would charge you $300 to actually move that money over. What you'll find is that if the card has that fee, it's most likely because they give you a longer introductory rate. So cards that don't have the fee might give you 0% interest for like 15 months, but if you pay that $300, you get the 0% interest for 18 months. So it might make sense for you to pay the fee, because if you're getting a 0% interest for 18 months, that gives you an extra 3 months to pay down that balance before the introductory interest is over with, and then you get that new interest rate. So do balance transfers affect your credit score? Yes, it affects a couple of pieces of your credit score because, like I've talked about on this channel before, your credit score is made up of primarily 5 different categories. And if you want to get an in-depth description about those, click this link. But it affects it in a couple ways. Number one, you're going to get an inquiry on your credit report. So it's going to be a hard inquiry. Those inquiries last on your credit report for about 2 years. The average age of your credit will decrease because that's 15% of your score. So before, let's say you had your card for 2 years and now you're getting this new card. Well, now your average age is going to go down to 1 year because this card is brand spanking new and that card is 2 years old. So like I said, it's 15%, not a large chunk, but something to think about. But if you don't close down your other credit card, it's actually going to increase the amount of credit that you have available, which if you're doing this the right way, will decrease your utilization. If you have more credit, it's going to look better because it's going to bring down that utilization rate. So if you had a $10,000 card and you max it out, you're at 100% utilization. If you get another $10,000 card and you transfer that balance over to get advantage of that 0%, now you only have a 50% utilization because now you have $20,000. You're not going to charge that other card, right? And then you will have the $10,000 on the other card. So to make this successful, you gotta have a plan. If you owe $5,000, you will transfer that money over. And within that 15 or 18 month period, you have to pay this down. And even if you can't, I'm going to put a calculator in the description that will show you how long it will take you to pay it off and how much it will cost you in interest. So you can actually plan and see, all right, here's how much I can afford to spend. How is that going to look like if I get this 0% interest? So click that link, play around with the calculator, and get an understanding of how you can get rid of this debt within that time frame. All right, so without further ado, drum roll, here are the best credit cards that you should apply for. Now, let me say this, I can't talk for everybody's state or country or whatever, but check your local credit unions because a lot of times they offer better rates. Credit unions can offer better rates because they are nonprofit, so they have to take that money that they make and put it back into the company, which is normally through better rates. So check your local credit union. There are certain qualifications depending on where you're at that would actually allow you to get into a credit union. Most of them don't offer 0% APR, but they also don't charge you a balance transfer fee. So it might make more sense financially. And if your credit is like really challenged, you can also consider doing a personal loan because sometimes credit card might be a little bit wary of approving you. It's probably better if you don't want to have that hit on your credit to actually go into a bank and talk to them and get an idea if you would or would not be approved before they actually go ahead and run your credit. That's called getting pre-qualified versus actually pre-approved where they actually have to run the credit. But anyway, the Discover It balance transfer card has 0% interest for 18 months, but it has a 3% balance transfer fee. The next is the Wells Fargo Platinum card, and that offers 0% interest for 18 months. And then again, the 3% balance transfer fee. After the introductory period, it will be as low as 16.99, so call it 17, to 26.49. Yeah. Next is the Amex American Express Everyday Card. Now this one is 0% interest for 15 months. Now it's 15 months versus 18 because there is no balance transfer fees. This one is also good because it has perks and your cashback rewards and all of that, but you must make sure you transfer those funds within 60 days to enjoy that 0% APR. Then we have the Chase Slate, which again, 0% for 15 months. There is no balance transfer fee. After your introductory period, it will be as low as 16.74 to 25.49. So use that calculator that I showed you, play around with these rates and kind of figure out what makes the best sense. Trust me, this will make a big impact. If you have 15 months of no interest, depending on what your balance is, that could be hundreds of dollars that you're saving and getting closer to building your wealth, being financially free, and doing whatever you want with your pockets. So please, I urge you, do not just watch these videos, take action. All right, that will do it. If you like this video, please like this video, subscribe and share with your friends because it's very important to get this information around the world. If you like what you saw, then, binge watch me. There's more options for you. And until next time, keep your money up.